Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, and it's a timely reminder given what has happened 7 weeks ago, as I've said here repeatedly in this commentary for months and months, the most significant feature of this market has been the key lows of 2021 at 15,665, which led to lows of late November 23, plus the lows of 2024, and I suppose also the congestion this year in January, February, late April, May, early June, and a high 8 weeks ago. And the recent move higher 2 weeks ago, and also I suppose this week. Up to test and seemingly halt at the overhead gold long moving average, currently 15,490. I'd also add to this for many months I also highlighted how the 15,840 level, along with this low for 2021 at 15,665, was and is also still a key level. So we also have the significant yet broken bright red upper time, currently at 15,060 of the early October 24 to mid-March 25 bearish shift pitchfork. A key showrunner for this market here this year. This break lower seems to be, the break higher seems to now be stabilizing, and I will likely downgrade this pattern in the next week or so. The other feature to watch out for is the 50% Fibonacci line for 2025 at 15,325. We seem to be trying to stabilize over this, and in which case the gold long moving average would be under real threat, and it has been earlier this week. Additionally, we have nearby the green short medium moving average, currently 15,215, which has acted as a sort of support in recent weeks. So overall, we have, as I've repeatedly said before, looking at them all together, some of these have been some pretty heavy duty resistances which had earlier capped the market. I said as a consequence last week, and I quote, "All this action nevertheless suggested to me a new pattern emerging. A late May to date rectangle pattern, currently 14,935 to 15,665, and it's that key level at 15,665 again." Last week I just spoke of this as an idea, but the action since late May fits this sort of pattern. Well, sort of fits this sort of pattern. And I'm inclined to now call it a new pattern and one we are working our way through. End of quote. Now this still seems to be the situation right now, and I'd take everything on board in that regard. Watch carefully those two levels, 14,935 to 15,665. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is the thoroughly broken, but even now still refusing to die, dark blue May to August 2023 bullish shift pitchfork that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines, which are currently 30.43 and 28.79 respectively. This one still will not die. Even when I thought 21 weeks ago that it finally expired, it still came back like a high-functioning zombie, influencing and impacting the market, especially the dark blue lower time below, currently at 27.14, and more recently the dark blue middle time, and now possibly the dark blue upper time again. Separate to this, we recently had the slowly declining gold long moving average, currently at 28.08, as resistance during July and August, but with the market moving higher, this is now support. I also said 11 weeks ago, and I quote, "I'd keep an eye on the green short medium moving average, currently at 28.07, and medium moving average currently 27.47, plus what I suspect may be a key level, and that's the 50% Fibonacci line for the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move in the last few months. End of quote. Now these three had 3 weeks ago, and also in late July and early August, acted as a base of action for the latest sweep high. However, over all this, please remember the words I said 9 weeks ago, and I quote, "So I'm finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tine? Or is it a hesitation, a somewhat large hesitation, with potential down to the 23.10 zone? Right now it's not easy to say which, but I'll keep an eye on the following: the short, medium and medium moving averages, and the 50% Fibonacci line at 27.55. They all have given a clue to a somewhat bearish future, but this has been countered by the big old dark blue lower tine, which is still here." End of quote. Yes, the big old broken dark blue lower tine lit the fuse in early and mid-July for the latest attempt higher, only have in late July and early August the then combined overhead gold long moving average and dark blue middle tine drop a whole load of sand on it to try and extinguish the bullish incentive. However, this did not happen, and prices have managed to push up beyond the dark blue middle tine, as well as the highs seen back in late July and August 2021, and those are at 29.05 and 29.17 respectively, and try the March this year high at 29.94.5. Beyond this, well, we have highs in late December last year between 30.53 to 30.61, but I think that might have been formed back then by the declining green short medium moving average. If you look to the left hand side of the chart, you'll see that they was capped by that green short medium moving average there, so I would be cautious about it. Plus, of course, the dark blue upper tine, but we realistically have the next significant resistance at the neckline extension of the September to December 2022 reverse head and shoulders pattern, currently at 31.13, which is quite a distance above. So it all depends if prices establish themselves over the key March high. LME 3-month 10. Okay, so the big picture here continues to be centered on the dark blue late November 24 to mid-April 25 bullish shift pitchfork. We're once again in between the lower time below, currently at 30.995, and the middle time above, currently at 35.780. In truth, we are once again a little under the middle time. Now, as I've said here many times before, much like some of the other metals I've discussed here today, there are a number of patterns here affecting the market all at the same time. From the bottom upwards, we have the low of April and 2025 so far at 28.925. And that's just below the July 2011 high at 29.005. I know these are a long way down, but it's best to make a note of them than not. Next, we have the slowly rising long moving average, currently at 32.340, and the closest support from the medium moving average, currently 33.150, and even nearer green highlighted short medium moving average, currently 33.880. Though this one is, to my mind, still suspect. Then there's the neckline extension, currently at 32.845 of the April 24 head and shoulders continuation pattern. This had been a resistance in the past, but is now support, as we saw back in July. Now, looking closer to the market, what 6 weeks ago was resistance and is now support is the small but significant congestion of the previous all-time high back in April 2011 at 33.605, and the close to it 50% Fibonacci line for the whole of 2025 so far at 33.660. These two had previously interfered with the market actions, and that is to be remembered. Closer still and penetrated on the upside 3 weeks ago, but late 2 weeks ago, and again last week, we're seeing the market push down through it, but not really stabilize above or below it, is the next 50% Fibonacci line. This time for the March to October 2022 move at 34.175. Now, looking overhead, We had a trio of resistance that are now separating apart. They are the dark blue middle time, currently at 35,780, the bright red neckline extension, currently at 36,065, of the August to November 2024 head and shoulders top, and the interesting, though I'm not sure how good it would be, bright green lower time, currently at 37,120, of the broken November 23 to November 24 bullish shift pitchfork. I've been on the verge of retiring this last one for quite some weeks, as it was broken way back in April, but has seen some good action since as a dynamic resistance. So I thought it's still best to include overall. And overall, I am watching the gradual guidance higher of the dark blue bullish shift pitchfork, whilst I'm also looking for what may be the next pattern idea. Now, at the moment, I'm considering whether we have a late June to date bull channel, currently 33,245 to 35,780. It's just an idea right now, and it has a lower bull channel line, but the upper bull channel line still utilizes the dark blue middle time, and that's something to bear in mind.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.